Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, February 28th, 2016. I added another position on Friday and we got a nice little reversal. I think we're going to get a lot more information tomorrow, and what I mean by that is it's the last trading day of the month, so we got to see how they're going to do it. But also, either we're going to see the bulls step in pretty early and move it higher, or we're going to see people just start selling. And I'll explain exactly what I'm talking about in the other charts. But let's start off with this. This is a daily chart. So the pattern that I'm still following is we're making some type of wave B. Now, once this completes, I'm anticipating a wave C to take these lows out, or at least, maybe this doesn't start right here and we come down and just start closing gaps. But it would make the most sense if we take these lows out and make a wave C here. I'm not really looking all that far out on it. I'm more looking for some of these gaps to get closed, and really that's the trade that I'm in right now. But bigger picture, this is what I believe is going on. So if we take a look at the hourly chart, now we have bearish divergences in place. I was showing you that this appears to be some type of megaphone top pattern, but it's also trading within a megaphone bottom. So if this is going to play out and this is a megaphone bottom, we should see the S&P come down and touch at least the bottom of this megaphone pattern, or break it a little bit before heading higher. Now, so this pattern is not that bearish. It actually means that once this low is made, we probably are going to come back up and start to move higher on it. But it's still, to get to the bottom of it, we're looking at a move all the way below the 1808, so the trade would work out really well. So this is the megaphone top pattern here. And you can see we came pretty close to hitting the top of it. Maybe they need to come up again to touch it, but we're really looking anywhere between the 1970, 1975. But also notice that we came right up to the 50% retracement, and that's from the high that is. Hang on one second. Okay, so that's going from this high here to this low. And you can see we hit exactly on the 50% retracement level before pulling back. So there's going to be, the bears still need to, put some more work in before they're going to start seeing momentum pick up. And I really believe it's the 1929 area is what they need to break through, and then we'll probably see a very quick move down to the 1895. And if it starts losing these lows right here, that's when I believe that we will be starting that wave C. So there's still work that has to be done. There's a chance that they're going to pop up first, but the bearish divergences, the very overbought conditions, has me believing that waiting for this move right here is dangerous, and I'd rather use it to be shorting rather than looking long. So if we take a look at the 15-minute chart, here you can see we had the bearish divergences in place. We also have this this bearish wedge. And again, looking at that 1927, 1929 area, that's the bottom of this wedge right here. It's also support from here. You have support, and then support here. So the bears need to push it through, say, this 1927, even go to 1920 area, to get momentum going to the next support area, which would be between the 1904 and the 1890. Now, if we get down there, that's going to mean that this wedge is broken here, and we should start to see momentum pick up on the downside. But again, there's still work that has to be done by the bears to really get things going on the downside. But again, we have bearish divergences. It's a bearish pattern, and we just need to really see things break before we can see the momentum pick up. Now, one of the reasons why I'm saying I think that Monday is going to give us a lot of information is, this kind of looks like it could be just a bull flag right here. and we've been just following this channel here, and if it breaks to the upside, then we're probably going to see a move someplace up to that 1970-75 area, where again I would I'd be interested in just building a short position, because once it's done we should start the larger move to the downside. But again, this is not a bearish pattern because it's a bull flag, and typically they would bounce, they would break to the upside. Now if it goes to the downside, that means that usually all these buyers here are going to be trapped, and we see momentum start to pick up on the downside. And then again, we really want to just keep an eye on this 1927, 1920 area, and if they break through it, that's when I believe we really start to see momentum pick up on the downside. So again, just to wrap it up, I think tomorrow is going to give us a lot of information. Being it is the last trading day in a month, we got to, leave the option open that they may try higher. If they don't, then I think there's going to be some trapped bulls that are going to be looking to exit this market in a fairly quick manner. And, we really just want to wait for this momentum to start picking up on the downside. I don't believe that buying dips right now is safe. I think it's actually really dangerous, and I do believe that the next larger move is going to be to the downside from these levels. So with that, enjoy the rest of your weekend, and I will talk to you guys tomorrow.